Hi everybody, I'm Isaac. Today I'm going to take you through one of my trades. We're going to look at this sort of controlled bid in the S&P 500. This is on quite a slow, low volume day. And it was a really good trade, and I suppose it just took that sort of deep understanding of the technical backdrop to give you that conviction. And then, yeah, this became a really great play. So basically what we're going to look at is how the market did this piece here. So 1 minute, obviously you've got no context here. And we're just going to start first by sort of thinking about what went on in here, which then kind of gave you the clues to get in, you know, the close that this trade was on, and then just have a little look at how that bid played out. So before we get into that kind of detail, we need to start obviously at a higher level. So down here in the bottom left, we've got S&P daily candles. And so you can see that this market's bullish. It's actually come from much lower down. So yeah, very bullish market. It's also trading, you know, right back at its highs. With quite an aggressive bid here. So you can actually see that, well, what I just drew a circle around is this bit right here. Now, the market has left some quite interesting structure. So firstly, we've got to sort of understand what's going on up here. Well, up here, market made all-time highs on a US holiday. So the stock exchange, like the cash market, wasn't open. After that, the first cash session back left this high here that I've just put the small circle around. Now that circle is a 2 TPO high to the tick, and there were thousands of lots into the high. So, you know, if you look at a footprint chart, it wasn't a complete auction. So this level is so ripe to go. Then there's all of this, all these congested highs. So basically you've got these congested highs into this really horrible sort of cash all-time high, which was 2 TPO, into this, you know, poor Globex high set on a holiday. And so basically everything up here is poor structure. There is no real reason for a seller to step in there. You know, it's rubbish. The market should be able to go through that. Now, the market got a bit more interesting though. So what kind of happened over this time is concern about inflation and the effect that will have on rising interest rates. And so the S&P kind of got caught between this vulnerable technical upside, right? And then the sort of like rates inflation trade. And so the week before, so the prior week, you know, this rates piece, kind of the rates inflation piece took over, and the market had this offer. On Thursday, it set this low. So this is a 2 TPO tail. It's set with 2 5-minute candles, like right on the half hour. And so for now, it's a strong low. The market then respected that low on Friday after NFP. So this is the NFP low here. The market then, sorry, I've got so many lines, you know, had sort of a false break of NFP, respected this tail from the Thursday, and then it started bidding. And so by having this rejection down at the low, so this rejection here, the market's effectively now said, okay, we're going to start trading the technicals again, right? Because we've now let that other piece play out, and that theme is now, you know, meta low, had a failure, and now the market's going to try the technical side. And so then it's had this bid. The bid hasn't been all that nice, and I've just sort of drawn these lines around it here that kind of like encompass the bid. Then on Thursday, the market gets, you know, this bid kind of gets us to the highs, and you'll see that there's no real seller in this, right? There is, you know, no lower lows. It's just one time frame, one participant the whole way. The market then gets these highs, and these highs are rubbish. And so, you know, under these circumstances, this market should probably push through. But what made this trade difficult was the fact that it was a bit more quiet and slow. Okay, so basically this is the upside. We've got this downside rejection, one participant in the market, vulnerable upside. So, yeah, again, sorry, I kind of just summarized this, but you had this theme of concern over inflation and treasury yields that played out last week. We set a low, and then the technical landscape appears to be in play currently. The market's bullish with this grinding bid, which has unwound the prior week's offer. Structure above is extremely poor. There's no resistance in the structure up to all-time highs. So this is key. On the day, the price action is slow with low volume, but the price action suggests that there's a buyer in control. We'll have a little look at that on the later in a minute. Then the trades obviously get long for the resolution of the poor structure above. Okay, so just looking at this again, so we are going to start watching a little bit in here. Sorry, actually a little bit, this bit here, and look at what goes on in this kind of like balance down here before we break out. And then we're just going to have a look here where I got out, because actually I got out when we broke that 2 TPO cash high, the all-time cash high that I said was horrible. And you know, I suppose really I had no reason to get out there, and I should have let this run further. Now, so yeah, let's have a little bit of a look there and trying to understand, you know, why there was this congestion there. Okay, so that's the two bits we're going to look over. And I suppose the other thing here is like what's challenging about this day is just kind of like how low the volumes were everywhere. You know, like this isn't ideal in a general sense, but in the right context, it's good. And then again, just thinking about, you know, those factors I talked about before, you know, those inputs to your analysis. You've got this low volume, forgetting the volume, sorry. You've got this failure, you know, of the theme that was in play last week. You've then got, you know, this high with absolutely no resistance, and you've got this bullish one-time framing market. And so, you know, I suppose there's no reason here for you to doubt this. You know, under this situation, so long as the market remains bid, you know, that's telling you that the buyer's in control. You know, there's no reason here, if you're really factual about it, that you shouldn't be sizing up in a big way, right? The lack of volumes here isn't necessarily a bad thing. All right, so let's go to the ladders. Sorry, 1 second, while I just make this full screen. Okay, so let's just start considering this block at the bottom. So if you look at the sort of bottom right of the screen, you've got my little 1 minute. Now, this is kind of, I suppose, this little auction block where now, you know, we're looking to leverage for a play higher. Now, to kind of, I suppose, understand, you know, that why it's okay to take a long in this kind of market, because let's face it, generally if a market bids to highs and the volumes are low, you know, that's a sign of, you know, the fact that we're going to get a failure. But here it's quite different. When the volumes are low and the market's staying bid, in this instance, and we'll see in a second, that the price action is giving us clues that actually we have a buyer in this market, and this buyer is trying to be kind of as passive and as slow as possible because the buyer is trying to buy at the best price, right? They're not trying to buy it now, they're trying to accumulate as much as they can at the best price. And so that's why we don't get this explosive, you know, race higher. We instead get this controlled, like bid, controlled grind. And so that's what we're going to see. So first, let's go and ask some questions about what goes on in this auction block before and straight after we break out. And let's see what that shows us. Okay. So, all right, the market's here trading up at the highs. Now, one of the things, if we look quickly back at the 1 minute chart, is we've got all these tails. Now, those tails in this situation is where the buyer actually sits. So if you're trying to get the best price, you're not sitting bid right at the highs, right? You're letting the market rotate back down to you, and every time it rotates back down to you, you're collecting it. if you're the only big participant in the market, right, because we're one time framing, then we know there is no kind of, there's not a lot of competition in this market. And so there isn't, well, in this instance, especially in this low volume market, there's no one else who's going to push through. So you're just letting this market come back and collect. And so this price action that we see here, where this market's staying really bid at the highs, is because there are lots of short-term small players, like day traders like us, that have, this understanding this market should go up, and they're buying the highs. And so what you see here, like you've got, there was like 200 at the highs, now 6, 54, 95, 100, market goes bid again, bids right up to the highs, and then doesn't go through, and then it starts to come off, and then there's 41 sold. And so almost what you're getting here is the fact that, like, if this is the level, you've got, I suppose I can draw it here where the level actually is, you've got all these small participants buying up, buying at the highs. The big buyer isn't there, going to take it to, the big buyer is sitting a few ticks below, and they liquidate. The big buyer sucks it all up, and then the market goes back to the high, bids again, comes off, and then each time, this buyer's the real big buyer, the other time frame participant in the market, is stepping up each time. And so that's what we're seeing here. So if we go back to the ladder, now we've got all this volume being sold off. This volume is probably the same volume that was being bought at the highs just before. So you saw, just as I said, there was like a 90 lot there. There was a bit of a big order down into 33s. Now 100 lots sold, 117 lots sold. But under the circumstances we said before, right, we've got this one time framing market. So we've got one participant in control here, right? And now here's a market coming off again. So this is where it makes a tail. So again, you've seen sellers push down, people trying to get out of their, I suppose like what they've bought at the highs, because they're worrying they're going to get trapped. But there's no one actually, continuously driving, came down there and we saw like 40, 50 lots, but we didn't really see any more. So there's no seller here per se, like no big seller. We've just got all these short participants buying at the highs, getting trapped, coming down, right? And now that the big participant now knows it, right? So this has happened again and again. You have to excuse my poor execution here. I was squabbling over a few ticks, so it's quite ugly. But if we go back to the 1 minute chart, we saw the same dynamic, right? First, the buyer's sitting down here. The buyer comes up a little bit more. The buyer steps up a little bit more, and then a bit more. And each of these tails is making higher and higher lows. And all of this trade that's happening at the highs is this kind of like weak participant, which is probably us, the day trader. And so now the market has effectively gone, and it's made this kind of like wedge against that high, right? It's gone up. All this buying, puked it, bought back up, buying, puked it, back up, puked it. And then it gets to the stage where the market, where this buyer has really exhausted all of the liquidity in this block, right? Like this sort of triangle type shape that's formed now in the short time frame. So in here, has now sort of exhausted all of the volumes, and now this market has to search higher. But what we do know now, from a bigger picture analysis, is the fact that we've now pushed into a zone where we don't think that there's any resistance, right? And so if you're trying to buy now, there isn't really anybody big to buy from. And so what that forces you then to do is, if you want to collect, accumulate as much as you can at the best price, not in the fastest amount of time, then you've just got to sit and be really passive and hold this price, and then hold this price, and then hold this price. And so the market bids up and comes back, and bids up and comes back, bids up and comes back, right? And so it's this participant who's always holding the lows. And so this is actually, it can be quite hard to read, but in this instance, what's key to understand is that while this market's grinding higher, it's not the fact that it fails through a high that causes you concern, as when the market comes back through a low, and that tells you that the move's ended. And so in this instance, because it was going to, I knew this was going to be quite a long move, I did this and put a stop in the market because I just wanted to, allow myself to concentrate and to know, so long as we don't come back through the lows, I'm going to stay in this. Obviously, I could actually run a trailing stop once we're, comfortably through here and we're showing this price action, like I said, where the market is just slowly bidding higher and higher, kind of like one time framing in the 1 or 5 minute candlesticks. Yeah, and that is that. So I was going to talk through a bit of price action up here. I'm not sure if I've missed it, but yeah. So basically, I was just going to go and see if we can spot some of the price action that I was talking about here, where the market sort of like bids up a couple of ticks, comes back, accumulates, bids up, and creates this grind. But anyway, if you were watching the letters in while I was talking, you would have seen it, and I'm sure you know what I'm talking about. Now, let's go, we'll go forward one more. And so now you can see that we're up at kind of like up in the 40s. So the trade started down here, and now we've got this kind of like one time framing bid. Now also, I actually mentioned before, like as long as this market keeps going like this, you become wrong when the market comes out of the lows. And you can see here, like on this bit where I've just drawn the circle, it's almost like the market's pushed higher, right? But this is kind of like that, in this instance, like the weaker participant, because in this really short time frame, the weaker buyer is the one who's being, aggressive and buying the highs, and the stronger buyer is the one accumulating at the lows. And so the market goes and breaks the highs, and then it comes back in, or in this instance, breaks the highs, holds there for a minute and comes back in. But that's not really like a false break of this. It's almost like borrowing from the future. And then the market sits here at the lows for a bit, absorbing that, and then kind of carries on. And so almost it's like, if you brought that and moved it down into here, you kind of get your, this nice consistent trend. And so again, what's really key is that this low holds. And so that then becomes kind of your running stop. Okay, so what we're going to look at here is how the market breaks the 45. So that's that really key, horrible high that we're looking at. And so the way I looked at this, I just said, all right, I want to see the market break 45, get some stops, and then, if that pings through, I might look to get out then. What happened was that we didn't really get any sort of like significant ping through. It kind of went a few ticks. I was kind of hoping for a bit more, maybe being a bit greedy, especially in this kind of low volatility, low volume environment that we're in at the moment, or on this day. And actually, because of what I said earlier about how, the high was set on a Globex session on a US holiday, as we break through the 45s, there's actually no reason to get out. And so what we're going to look at is as this market bids through the 45s, it then starts to do a bit of sideways. And in that sideways, we've got to ask the question, okay, the market, let's draw this again, sorry. So the market was doing this grinding move up like this. And then pop comes up, pops through, and then it starts to flag up here. And so then we've got to ask again, like, okay, is all the selling up here because someone's trying to get short? Or is all the selling because people have been getting long and they want to take profit? And there's almost this exchange, right, where, aggressive kind of short time frame people have got long and now they're looking to get out. And so long as the market kind of like holds up here at the highs, in effect doesn't break this low, then there was kind of like a transfer of positioning, right, from like the day time frame, the short time frame traders to, say another time frame long participant. And as long as that's true, as that's the transaction that's going on, not fresh selling into the market, then this market should move higher. All right, so that is what we're going to look at now. Okay, so we should start to see sort of this bid kind of like change personality. See, there you go, you went all through 44s, the market just bid straight through, one tick now off that 45s. And this is so likely to go, right? Because it's such a terrible level. And so someone's reloading 44s, but again, someone bid 50 lots into it. Now, some small bites, some small nibbles into 44 3/4. All right, there we go. Now that's a 3 TPO ledge effectively. And we're again really likely to see this level pop. Right, there you go, some more size, 100 or so lots through, and the market's trending through. So the market's kind of initial reaction was to tick forward a few ticks. There's a little bit more of a drive higher now, as I said, I sort of thought the market would go a little bit further than that, but under this, the sort of like the dynamics or the environment of the day, it wasn't meant to be. So you can see, there's still quite a lot of trade out there, 200 lots into the highs. The market's staying, well, relatively bid. There was an offer back down there, but all right, let's kind of like work with this maybe a bit more, at a different level. So, okay, so what I did there was I was expecting more, obviously, and I got out. But, okay, let's go back to the later and see what we see. So, okay, so there was a little bit of selling, just a few really small lots. I think it was into 44 3/4. But so far, the market's staying bid. So then there was, a couple of hundred lots then traded at 45s. Now a couple of hundred lots, or sort of 200 lots into 45 1/4. And that's taken bid. Market's then buying at 45 1/2. Offering back down to 45. But so really, like, you can kind of see that the buyers are kind of like holding this market bid, right? And so then there was 40 lots traded at 45 1/4, I think. Again, kind of roughly the same amount. And so this market's holding bid into the selling, right? Again, we've seen the selling, right? 45 1/2's taken offered, 45 1/4's taken offered. You were getting like very small, it's 1s, 7s, and there you go, like another 100 lots into 45 1/2. Again, market's bidding back into the highs. So even though we are seeing selling here, we are still seeing a market that keeps going bid into it. And under the low volume, right, if we were going to see a buyer, a bigger buyer, find a bigger seller, talking about sort of people in the other time frame, then that should show up as a spike in volume, which is not what we've seen. So we've seen relatively flat volume. We've seen a market that's staying bid, so it's kind of suggesting this transfer. And then also, as I talked about earlier, under one circumstance here, when the market pops out and goes a little bit sort of like asymmetric in terms of velocity, or it changes velocity, and then if it sits and does a bit of sideways, it kind of allows the market to then catch up with the trend. And this is kind of just like accelerated, or I suppose like pushed higher the price at which the market then kind of like absorbs. But effectively, it's that same, careful, controlled bid. So, okay, the market's come back off, and this time it's like probed a little bit below the 45s. But we saw before I got sidetracked drawing pictures, the market was still bidding up to 46s. So, and I draw this line back here, kind of, well, maybe that's not so good. But so long as that holds, then we are still thinking that this buyer's in control of the market. And so given the fact that there's no, as I said before, no resistance above, we've got all the reason in the world to believe in it. So, okay, you can see here, this market did offer below, but the market's now taken 45 bid, 45 1/4 bid, 45 1/2 bid, now trading to 45 3/4. So still buying size, there's 100 lots there. And for the moment, this is size, right? We're seeing like a lot of ones and small lots. And so, I suppose this is significant that it's still bringing in, some of the bigger clip sizes on the day. Not maybe at a fast velocity, but still they're there. Then again, like 90, 100 lots kind of sold back down, again absorbed on the bid. And I suppose what's key here, this is the first time the market's pushed out of this kind of couple of 4-minute candles. So the market drove higher, went sideways for a bit, and now this is the first time it's kind of like popped out the highs. Okay, so again, it's like holding bid at 46s, absorbing the 100 lots, now pushing higher. Now this is where I suppose we've got to start asking questions. So what you're going to see here is all right, there you go, it's kind of gone back down to 46 1/4, 1 lots. There's a lot of really small 1, 7, 6, 3, 16. There was a 78 in there, 1s, 10s, 11s, 26s. But all of that, and then even 30s, all of that was really slow, unimportant. Now, I just want to move this, sorry, and we'll just go back up here. So we did this, we then pushed higher, we then flagged sideways. The market then pushed up out of that flag after it had gone in kind of in a still control way, taken all of that liquidity. I then pushed higher. And then in this control way, this buyer lets the market come back, and it comes back. And as it pushes back into this zone, that was our 1.7s, 30s. There was 178 lot that went through, I think. But other than that, it was all small. So if the market's come here, taken all of this liquidity, pushed higher, and then when the market did let it come back, there was nothing back inside that zone, then this market almost certainly has to go higher. So again, all of these signs that, okay, that, while we've got to a level of interest, what we're seeing on the ladder is saying that we should still go higher. So anyway, that's quite, I suppose, an in-depth look into that. Let's head back to our PowerPoint. All right, so what we saw, again, was just this piece here, and then this bit of price action at the start, and both just showing this really sort of like slow, but kind of like careful and controlled buying. And so on these slow, low volume days, it's important to understand where we get our conviction from, because the moves can take time to play out. And again, here is the fact that we knew that the buyer was in control of the auction. And that meant that we really had to lean on this analysis, or I suppose the fact the price action told us that there was a bigger buyer in this market. Then we could lean on this structure above and say, okay, I'm willing to just buy here and let this run, because there isn't anything that the market's telling me that would give a seller a reason to step in, in any kind of aggressive or substantial way. And so here, the market's telling us there should be this sort of like imbalance, or this kind of like path of least resistance quite clearly to the upside. And because of that, and because of the fact that we can see that there's this buyer in control of the price action, we have this kind of like perfect recipe for this like slow, careful bid. And then once we've got that, that's something we want to get involved in as early as possible, and understand that it's kind of like passive, and understand where we're wrong, which is again when the market comes out of the bottom of this kind of like short-term, one time framing kind of grinding channel structure. And as long as it stays above that, then we're going to stay in this trade. And so again, like I could have got a lot more out of, well, not necessarily a lot more, but more out of this trade than I did, because what I took was definitely short ticks, but there were more short ticks in there. Okay, I hope that was interesting. It was a bit slower, the price action, but I still think a really interesting day, and also a massive asymmetry in there. When you think of all of the information that sets up this trade, well, there's nothing actually against it. It's all pointing in the same direction. And so under those circumstances, we need to, and well, I definitely needed to size up more. And this is one of those quiet days where you can get a bit more aggressive.
If you find this video interesting, if you want to go deep into the AXIA training method and how our trading team of 7-figure traders develop setups and strategies, and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.